This is the ETH Bitcoin ratio versus Fed net liquidity outright, not the year on year. And Fed net liquidity leads it by 3 months. And we know that in 5 months ahead of this, we will see more liquidity coming. It keeps going up. So if it keeps going up, then ETH eventually will break out from Bitcoin. Now, I've been showing for a while this chart of mine, which is the trading view chart of the log chart of ETH versus Bitcoin. And I think it's a huge wedge pattern. And if it is correct that it's a wedge pattern, it's massive. But over time, if this breaks, then ETH is going to massively outperform.
Real Vision founder and chief executive officer Raoul expects Ether, the second largest cryptocurrency by market cap, to have a fairly great run during this bull market and massively outperform Bitcoin from last year's lows. So far, both assets have had significant price gains over the past year, but are still well below their all-time highs. When one considers year-to-date gains, Bitcoin takes the prize with an 87.33% increase compared to Ether's 66.11% increase. But Ether has had a better run over the past year, rising by 67.11% over the past year compared to Bitcoin's 51.34% increase. But Powell believes the top altcoin is going to put in a much more impressive performance by all metrics going forward. In a recent broadcast posted on the Real Vision crypto channel, the renowned macro guru discusses certain macro conditions which he says all point towards the fact that global liquidity conditions are about to change. According to Powell, the GMI Financial Conditions Index, which gives a 5-month lead on Fed net liquidity, is up and climbing, which means Fed liquidity will continue to do the same for the rest of the year. Given the established over 80% correlation between the crypto market and Fed liquidity, Powell says it's certain that crypto asset prices will keep rising for at least the next 5 months. The macro guru also discusses the next probable move of the U.S. Federal Reserve. According to Powell, the central bank, as well as many other major central banks, will soon be forced to step in and save their respective economies and financial markets. Though Powell is not certain when we can expect to see that sure flow of liquidity into the markets, he is certain that it would be preceded by another U.S. banking crisis. When the regional banking sector again begins to show serious signs of an impending blow-up, Powell says the Fed will take that as a clue to not only cut rates but also print more dollars to rescue the banking sector and, by extension, the overall economy. Powell also shares an important fact about investors' behavior, which he describes as a signal that the coming months will be very favorable for altcoins. According to the macro guru, liquidity first goes into the highest quality assets before going further out the risk curve after a trend is established. Powell believes this is an important signal that money will soon start moving out of Bitcoin and into altcoins, beginning of course with Ether. We will now bring you some important clips from Raoul Powell's video as he shares several interesting charts to back his hypothesis. Please watch the video to the end, hit the like button, and subscribe to the channel for more videos. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We do know that a lot of people like fractals in crypto. Sometimes they work, sometimes they don't. Do they give you an informational advantage? I think generally, contextually, they help you understand human behavior and how prices can move. I don't really like to trade on them all the time or, as the main thing, but as supporting evidence, often interesting. I've also had some spectacular failures with them too. If you remember the ETH call, the next leg higher call back in 2021, that was based on a fractal. It completely failed, but luckily I owned call options, so it wasn't that painful. But anyway, so you never always know. But the point being is this cycle is pretty similar to 2010-11 cycle. Same kind of setup. So that's interesting to me. What's interesting, it's a similar kind of setup from the 2017 cycle, 15-16 cycle. So we've got a similar structure and a similar kind of market. 2019 was a bit weird because we had that big correction over all of 2019 after a huge run to begin with, 300% up, then a big correction down, and then we sort of went parabolic. I have a feeling we might go parabolic earlier here because I think we're getting closer to a banking crisis within the regional banks that will require the Federal Reserve to step in. Interest rates are kind of getting out of control, so interest rates going up, the yield curve inverted, bad news bears for the banks. You can use the KRE ETF to see where we are in that. But if that starts breaking 35, 30, then it's game on for more cowbell to come because the Fed are going to have to bail these people out. And then we've got the commercial real estate problems behind it. So that's the kind of backdrop of why the cowbell will come. And I think it's even an excuse. Maybe that's the reason the Fed are tightening rates even further, is to create a crisis so they can cut rates, so they can monetize the debt. Because if they don't, they have to print more money because the interest rates are higher to pay for the debt payments. And that becomes a total catastrophe. The key point is liquidity up. If I use my simplest forward-looking indicator, which is the GMI Financial Conditions Index, it gives us a 5-month lead on Fed net liquidity year on year. And it says liquidity goes up till the end of the year. Okay, if liquidity is going up to the end of the year, it generally means crypto prices are going to go up till the end of the year, because I've shown the relationship between the two. There's in fact an 87.5% correlation between global liquidity index, not the Fed net liquidity, the global liquidity index, and Bitcoin. The reason it's only 87% and not higher like the NASDAQ, which is 97%, is because Bitcoin completely diverges so much in bull markets. That's the outperformance and the boom-bust phase. Anyway, Fed net liquidity is going up. Global liquidity is going up. We can look out 5 months. I can actually look out to 2026. That's the theory and hypothesis that I've been working on in the Everything Code. But right now, it tells us liquidity goes up. Now, liquidity also does something interesting. In all financial markets, after a period of contraction, when liquidity comes in, it goes first into the highest quality assets, and then eventually, once the trend is established, it goes out much further down the risk curve. So you see it in bond markets, it goes from government bonds to better credits, to junk bonds, to emerging market junk bonds, for example. That kind of risk curve is very common, and it's the same in crypto. It's like a human behavioral trait. When do I feel comfortable taking more risk? Am I making money? Do I want to speculate more? So what I found is, while I was thinking through this, thought, well, obviously crypto must act the same way, and it does. And here's the proof. I don't think anybody's seen this chart before, except Global Macro Investors subscribers. This is the ETH Bitcoin ratio versus Fed net liquidity, outright, not the year on year. And Fed net liquidity leads it by 3 months. And we know that in 5 months ahead of this, we will see more liquidity coming. It keeps going up. So if it keeps going up, then ETH eventually will break out from Bitcoin.
In one of his recent tweets, Powell shares an important update on 3 crypto assets that are clearly on his radar. Here are the tweets. The crypto risk curve, Ether versus Bitcoin, will soon break out. Solana versus Ether will soon break out. Bitcoin, Ether, Solana, it's all going up. Some more than others. Don't mid-curve it with your own narrative biases. Other things will do well or better or worse too. The tweets sum up Powell's outlook on the cryptocurrency industry for the next few months. The macro guru is certain that crypto assets will keep rising, especially as soon as the Fed begins pumping hundreds of millions into the economy. However, he believes certain crypto assets will perform much better than others. In his video, he concentrates on Ether, which he says will keep appreciating due to the macro factors and its own underlying fundamentals. According to Powell, Ether could be in the acceleration zone as soon as it is able to break through the 2 previous peaks. Powell also has a great outlook for the overall crypto market cap, which he says could hit a new all-time high of $10 trillion if the liquidity conditions improve significantly, as he predicts it would. Here are more clips from the interview.
But over time, if this breaks, then ETH is going to massively outperform, which has been my hypothesis for a while because of network activity and the amount of things being built on top. But another way of looking at this is I can use the ISM, which is even more forward-looking than our financial conditions index. The ISM gives us a 20-month lead. It's inverted here versus the ETH Bitcoin cross. It kind of shows us where the business cycle is going. And as the business cycle improves, the ETH Bitcoin cross will improve. We're at the point where the business cycle will start to turn as we start bottoming in the economy. I know this is the most contested thing on earth, but that's what my work shows. And therefore, ETH Bitcoin cross will start rising, and massively so. So that's getting me very interested in that, in ETH over Bitcoin. Now, the next chart is the Fed net liquidity versus ETH. I mean, it's 1 for 1. It's crazy. But, and we see this with many assets, but as I mentioned before, NASDAQ and S&P started dislocating from this as the AI technology narrative started attracting new capital and they're secular adoption models too. And so that starts outperforming. So once crypto starts seeing that, I'm guessing it's going to be the ETF we're going to start seeing this drift away from the models and start outperforming. And that is, again, a signal that we're going into that acceleration phase that I'm looking for. And I always find that acceleration phase is obviously the most exciting part. That's the point when people start stupidly counting 1,000 for every time Bitcoin goes up. Oh, it's gone from 30 to 31 to 32. People start putting laser eyes and just lose their general shit. But it's a lot of fun, can be very stressful. But that point, I think, is setting itself up by all the macro indicators I look at. The other thing is just the pure chart of ETH. It's gorgeous. That kind of wedge with the flat top, that's the bottom pattern. We've got that zone where it needs to break through of the previous two peaks. Breaks through that zone, and we're probably into the acceleration zone. Now, could it go up and pull back down and retest? For sure. How does it do it? I don't really care. What I'm looking for is the long-term trend of adoption here and the appreciation of the asset price due to the macro factors and also the factors within Web3 and crypto itself. So that's kind of maybe our line in the sand. And again, it's not something you just want to buy all in just because it broke that level. Just it's one of the marker stones en route. We've got all the other macro indicators too. But another chart really struck me. And it's this chart of the crypto market cap minus Bitcoin and ETH. So this is basically the altcoin and stablecoin market combined. Now, I think of stablecoins as cash on the sidelines that move into alt. So overall, I think this chart is a literally perfect wedge pattern. And it too, like everything else, suggests we're about to come into alt season, the risk on season. And if that is the case, this is going to go a long way. This is when crypto total market cap goes from, let's say, wherever we are today, 1 trillion or so, and it ends up going to 10 trillion. Something crazy like that. I don't know exactly, and it doesn't matter exactly. Too many people care about price targets. It's the texture of the move that matters and the general trend. So everything is consistent here that something big is about to happen. And the time horizon here, a lot of these are longer term charts, is I think the banking crisis comes back at the end of the summer and we start to see changes. I think the Japanese may have to intervene in their bond market again. Maybe the UK do too. But we are really at the cusp. You cannot deal with bond yields going like this, going into refi season. So something is about to change. It's going to change big.
The current crypto market conditions greatly prove Raoul Pal's assertion that it's altcoin season. As of press time, leading altcoins like XRP, Solana, Cardano, Polygon, and Avalanche are putting in some big moves. XRP, which a judge has ruled as not constituting an offer of investment contracts or, in other words, security, is up by over 64% in the past 24 hours. After news broke of the judge ruling in favor of Ripple over the SEC, the cryptocurrency climbed 15% immediately and 70% in a few hours. With the recent gains, XRP is now the fourth largest cryptocurrency by market cap after Bitcoin, Ether, and Tether. Solana is also up by 45% in the past week and over 70% from last month's lows. It is the third best performing crypto asset in the top 20 after XRP and Stellar, which is up by over 50% in the past 24 hours. Other top altcoins putting in big moves include Cardano, which is up by over 20%, Polygon up by 27%, and Avalanche by 23%. What are your thoughts on Raoul Pal's interview? Do you agree that it's altcoin season and we will be seeing lots of big moves from top altcoins like Ether, Solana, XRP, and Cardano? Let us know what you think in the comments section. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.